A lot of non-resident owners don't realize this, but if you're renting out a property in Canada while living abroad, you might be overpaying tax every single month, and the CRA won't correct it automatically. So in this video, I'll show you how the non-resident rental tax system actually works, what forms are involved, and how to structure things properly so you're only paying tax on your actual rental income and not on the full rent amount. Let's break it down. There are two filings that happen each year, and they work together. Form NR6. This prepares the upcoming year and allows tax to be withheld on your net rental income instead of your gross rent. Section 216 return. This looks back at the year that just ended and calculates your final tax owing or refund. So each year, you set up the year ahead with the NR6, and you close out the previous year with the Section 216 return. Once you understand the dynamics, everything becomes easier to understand. If you don't file an NR6, your Canadian agent is required to withhold 25% of your gross rent, no matter what your expenses are. But once the NR6 is approved, withholding is based on your net rental income, which is your rent collected minus expenses such as property taxes, insurance, repairs, mortgage interest, or management fees. This means you're paying tax based on the amount you actually earned, not just the amount that came in. Once an approved NR6 is in place, your Canadian agent will collect the rent, subtract eligible monthly expenses, calculate the net amount, and send the 25% of the net to the CRA, and they must do that by the 15th of the following month. At the end of the year, your agent will issue an NR4 slip, which shows how much rent was collected and how much tax was withheld. You use that NR4 slip when filing your Section 216 return. The CRA requires that someone living in Canada is responsible for withholding and remitting the tax. This could be a property management company, an accountant, or a family member or friend in Canada. However, if payments are late or incorrect, the CRA can apply interest and penalties, and the agent may be held responsible. So most non-resident owners choose a professional company who does this routinely. So here's the system in one sentence. NR6 reduces the withholding for the year ahead. Monthly remittances send the tax to the CRA, and the Section 216 return finalizes the year and determines your refund or balance owing. If you'd like help setting this up or making sure the filings and remittances are being handled correctly, our team takes care of this process for non-resident owners every day. We make sure it's done properly, on time, and in a way that avoids unnecessary tax withholding. Thanks for watching, and check the links below for more resources on non-resident rental income and CRA compliance.